The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 25th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering thought, folks. For changes to be of any true value, they've got to be lasting and consistent. Anytime we sincerely want to make a change, the first thing we must do is to raise our standards. You know, the most important part of change is what we demand of ourselves. If you're looking to make some changes in your life, then give this a shot. Write down all the things that you will no longer accept in your life. Write down all the things that you will no longer tolerate. And most importantly, write down all of those things that you wish to aspire to. If you commit to constant and never-ending improvement, if you do that, you will get the changes you are committed to. Let's go take a look at the changes in the marketplace right now. Dow is up 40 points, trading at 14,716. S&P up 7 points, up 0.4%, trading at 1586. Composite up 21 points, up almost 0.7%, trading at 3290. Russell 2000 up 0.9%. It's the leader in the clubhouse, up $8 and a little bit change, trading at 942. Google off a bit this morning, down $2 and change. Apple up $3. Microsoft having another stellar morning, up 91 cents out there, up almost 3%. Intel up a penny. Cisco up 14. Moving to the upside, the leader in the clubhouse is Cabela's Inc. CAB up $8 and change. Biogen just behind it, up $7. That's up 4%. F5 Networks up $7, up 10%. Akamai Technologies up 18%, up $6 and change. IPC, the hospitalist. IPCM is the ticker symbol. They're up 14% this morning. EQT Corp, they are up 8%, up $5 and change. O'Reilly Automotive up $5.64. Bally Technologies, BYI, up $5. That's up 10%. Angie's List having a stellar morning, up 24%, up $4.83. ServiceNow, NOW is the ticker symbol. They're having a nice morning as well, up almost 13%, trading at $42.43. To the downside, Carbo Ceramics off 13%. That's off $11, trading at $75.32. Intuit having a tough morning, down 12.5%. That's off $8. Melanix Technologies off 13% as well, off $7. You've got Domtar Corp, DUFS is the ticker symbol. They're off 7%. American Railcar, ARII, off 12%, down about $5. Varian Medical Systems, VAR, off about 7%, off $4.70. Citrix Systems, CTXS, off $5. Safeway Inc. off $4. That's down 14%. CAI International, CAP, is the ticker symbol. They're down 14% this morning. Qualcomm off 6%, off about $4. Equinix, EQUIX, off about 2%. Our call-in number is 877-927-6648. Give us a call. Would love to hear from you. We can talk about your stock chart or anything else that you would like. Let's start off by taking a look at the S&P 500. Let's go see what she is doing right now. Trading just slightly above the 0.786 retracement off of the swing point high that was formed on April the 11th. That high was 1597.35. That was the high. The low that we're using to do our retracement is a low that came in on April 18th. You can see the number 1584 is a 0.786 retracement. You're trading at 1586 right now. The S&P 500 now trying to close inside that rising price channel. We've seen tests of this rising price channel The last two trading sessions, you're up in it today. A lot of time left in the trading session. We'll see if this will hold. It's also you're paying attention to the close of the S&P 500 today, because if it can close inside 1586.17, you're just slightly under it right now, then the S&P will go at least tag the April 11th high. Even if it tags it, takes it out, moves higher, folks, we have seen nothing but big volume off the top from all the leaders out there. It is sending big signals, including the S&P itself, the index, which had volume off the top on April the 15th out here. Be very careful. We go take a look at the SPY. Let's go see what the SPY is doing here. The SPY right now trading out at 158.53. We can see the SPY here having tagged that downdraft from April 15th. Tested it yesterday. That downdraft had 217 million shares. The high of that was 158.13. Yesterday got up to a high of 158.30, closed at 157.88. 96 million shares versus 216 million shares to the downside. Right now, so far, in the first 42 minutes of trading, the SPYs have 25 million in volume. So volume today is not too bad, at least during the first 45 minutes of trading. The SPYs here now tagging the area of April 11th. That swing point has 110 million shares. The low there, 158.54. You're trading at 158.55. You close inside that level. That says it will go tag the highs, 159.71. Let's go. As long as let's do it like this. It saves time. Let's go take a look at the diamonds, and we'll go take a look at the Dow. If we take a look at the diamonds here weaker, most certainly than the S&P 500. The diamonds are nowhere near the top of the April 15th downdraft. That high is 147.93. 14 million shares to the downside. Yesterday's move was 5 million shares. The prior day, 10 million shares. So you had some decent volume on the session of Tuesday out here. You can see that price has gotten back inside that rising price channel. The diamonds will have significant resistance at the price high of 147.93. That is the downdraft from April 15th. We take a look at its retracement level from its high of April 11th down to the low that came in on the 22nd. What you will see is the 0.618 retracement level is contained. I suspect what you'll see in the diamonds is you'll see the diamonds try to go tag that high from April 15th out there. But they're going to need some help from stocks that have a little bit of a dead cat bounce like IBM and so forth. Let's go take a look at the actual index itself, see what the Dow is actually doing here. Give me a moment. There we go. Trading out at 14,717. If you take a look at this, you can see that it's also really the same pattern out here. If, in fact, the Dow can make it up, you can see it's right at the 618 level. So next level is 14,792. That would be the 0.786 retracement. And if it can get up there, maybe it can tag the April 15th high at 14,865. Let's go take a look at the Russell 2000. Let's go see what she is doing. That is the leader in the clubhouse here, trading right now at 942, powering through the 0.786 retracement. Looks like that wants to make its way all the way up into this swing point, most recent swing point, which was April the 11th. The low of that is 944. 81. It has not gotten there. The high is 951.39. Looks like, though, that is where she wants to trade up to, gapping up a little bit this morning. Let's go take a look at the ETF. Let's go take a look at the IWM. Let's go see what kind of volume we have in place here. We take a look at the IWM yesterday, moving up. Excuse me there. Let me pull this down here. Moving up with a volume of 41 million, taking on that 100 million downdraft day from April 15th. Not anywhere near the volume today so far. 8 million shares in almost 45 minutes of trading out here. So volume, not too bad. Certainly better than yesterday, but nowhere near the 100 million share day on the downdraft session from April the 15th. The IWM looks like it may have already tagged the April 11th low, which is 93.75. 32 million shares up there. It has gotten up to a high of 93.73, so it has not actually tagged it, but most likely will. And looks like this will go ahead. If it can close above this downdraft session from April 15th, no reason for it to not go test 94.57. That is the April 11th swing point high. Let's go take a look at the Qs here, see what the Qs are doing. Right now, trading out at $69.88. The Qs going to make a run for this area of resistance. That area of resistance really being set up by the downdraft that occurred all the way back in September of 2012 on the 24th out there. Downdraft with 32 million shares. That area was tested on September 25th and was tested on April 11th, April the 10th, and that was the only other 2 days. Looks like that is going to be the area where we will also take a look at a test. Yesterday's volume on a sideways move, 44 million shares, so no great big deal there. Expect the Qs to run into resistance as they get to the $70.08 range out there. Let's go take a look at some of the other indexes out here. Give me a moment here to hit the right tab on my screen. Let's go take a look at the semiconductor index. Let's go take a look at the SOX and see what it is doing. Right now, the Philadelphia Semiconductor Index, it is trading out at 439.80. It is up over the downdraft from certainly down over the downdraft from April 15th. Came back and tested the lows here, the swing point lows from April the 5th. Where is this headed to? Well, it's already trading inside the March 14th level, so we'll see if it can take that out. That March 14th high is 443.41. It has not tagged that area, but that is where she is headed to. That is on the SOX. Of course, we got Microsoft, Intel behind the power there, so we'll take a look at a couple of those stocks. See what else do I have out here index-wise. The composite. Let's go take a look at the NASDAQ composite, see what she is doing. NASDAQ composite has this 1.272 butterfly pattern still in place here. That is, and you can also see, I also have the rising price channel. That is the blue diagonal lines that you're looking at right now. The composite doing what it's supposed to do. Once you break through there, it's supposed to go up and test it to see if it can get back inside. So far, just a test, which is also the test of the April 11th swing point where we saw that 1.272 butterfly unfold. I think that's all that I've got here index-wise. Well, we can let's go take a look at the Wilshire 500. Let's go see what this is doing. Wilshire 500 also moving up into the swing point of April the 11th. That high, 16,845. It's trading at 16,744. At 16,744, it puts it inside that April 11th swing point. So it, too, will go tag the high of that. Again, that's 16,845. Let's go take a look at what's going on in the commodity market. Let's take a look at, actually, let's do this. Let's go take a look at copper. We were looking at copper the other day because we had that hammer candle that was present. That hammer candle was tested. Let's go take a look at the volume that it was tested on. The hammer candle we're looking at, folks, takes you back to April the 18th. Volume there was 103,000 contracts. It was tested with 89,000 contracts, so you got a swing point tested on lighter volume. The hammer candle held. That was a nice low, and then he had that bullish engulfing candle yesterday. Additional follow-through today. Light on copper, which has truly been hammered, not just speaking about my hammer on the charts here, but truly having been hammered. Now making a move up to at least the 330 level, but probably will come back and test that swing point high, or swing point from April 9th out there. That low, 337, the high, 345. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 54, Composites up 25. Jumping into the fray here, we got AutoZone up $11 and change. That's up 3%, and not to be outdone, but you got Priceline right behind them, up $11 and change out here. That's up about 1.6%. Let's go to Altamont Springs, Florida. Let's go to Kem. Kem, thanks for calling. Thanks for holding. How are you this morning?
I'm okay. How are you doing, Steve?
Excellent, excellent. Thanks for asking. You want to take a look at two equities here. One is BMY, Bristol Myers Squibb. Tell me what you're doing there, what you're looking at, and how I can help you.
I'm looking to go short. They got a conference call today at 10:30, which is in about 6 minutes on their earnings. They fell a little bit short on revenues, and also I guess they have some patents expiring on some of their cancer drugs. So I'm looking to short the stock, and I probably won't do it until after the conference call, though.
Okay. So as we take a look at it, we'll look at the daily chart first here. And what Kem is looking at, it made a high here April 23rd with some fairly decent volume, 8 million shares. And yesterday, that was 2 trading sessions ago. Yesterday's candle actually formed a evening star reversal candle formation. So, Kem, if you're going to go short this, you got to make sure that your stop is above 42.87. That's where you should find a resistance. I would say a close above 42.87, and you would be wrong on the trade. That resistance would all of a sudden become support. Had a little bearish candle right back here on April 15th, and the same very small one back here as well So you're really on the 3rd, 4th of April. So it's really this set here that you want to be paying attention to. Gaps down this morning, a little bit adding to the bearish outlook. What you don't know is you've got these two trading sessions right here on March the 22nd and March the 25th. Very narrow price spread out here, but big volume. What you want to see if you want to go short, you want to see it get below those sessions. So if we take a look at this, is it a buyer, is it a seller, what's inside there? When you don't have any wide price spread, it's just something you got to really pay attention to. So the time to go short this is when it clears the lows here of 39.80, and that's at March 22nd time frame out there. Then the question is, okay, so let's assume that short is the right call here on Bristol Myers. Then the question is, where's your target? Have you picked out a target yet on this?
No, I haven't.
Okay. So if we take a look at targets, typically your first target on any trade should always be to come back and take a look at the swing point. Now, in this case here, your swing point would take you all the way back to December 28th, 2012. But it means you've also really got to be paying attention to these other volume bars out here, which would be January 24th and January 25th. You got 20 million and 21 million shares. So what we're going to come back to this. I'm going to go ahead and put the weekly chart up on the screen. And just on the weekly chart, let's just also see what it is that we can find out here. And on the weekly chart for Bristol Myers Squibb, folks, that's what we're looking at. BMY is the ticker symbol. What we can see out here is we can see a hammer candle. So this hammer candle down here is November 16th, and low there is $30.64. So should this really fall out of bed here, that is on the weekly chart, that would be the area where you would expect to find some very bullish support. You had that hammer candle at those lows, and also, remember, we were looking at the daily chart, and we were noticing the evening star. We have the morning star on the weekly configuration here. That's on that August 10th, August 17th, and August 24th. So you can see the bulls truly on the weekly chart inside Bristol Myers hanging out right down there. So that, I would say, would be your ultimate outcome if the trade were to actually work and you were to go short. So we really have our parameters from a price standpoint, and now it would really be a matter of what's the risk-reward situation. How does the risk reward pay off? And the easy way to do that is to use this position size calculator, which I'll put up on the screen here. I'm going to go back. First, we're going to put the numbers in. So I'm going to go back to the daily chart. So on the daily chart, we're saying that you wouldn't enter this until it gets below 39.80. Well, yeah, I mean, you can enter whenever you want, but I'm saying that once it gets below 39.80, you will have cleared a support level. And we know that it's going to run into resistance here probably right at about the high of January 25th, 36.71. So what you would want to do, Kem, is if volume, let's say volume comes out of it today with more than 20 million shares, or as it's coming back into that level, it's more than 20 million shares, then you can say, okay, it'll go all the way back down now to likely the bottom of that November 16th area. Let's say your ultimate outcome around 30.64. What we're going to do when we come back is I'll put the position size calculator up on the screen and help you to identify what your position size ought to be if you go ahead and take this trade. All righty?
All right, thanks a lot.
Absolutely. 877-927-6648. We come back with Kem. We're going to explore the possibility of shorting Bristol Myers Squibb. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 60 points right now. S&P is up 9. We're going back to Kem in Altamont Springs, Florida. We're taking a look at Bristol Myers Squibb, the ticker symbol BMY out here. So, Ken, what I'm going to do, we've the most important aspect of setting up the trade is getting the position size right and identifying the risk out there. First, you put together the numbers. Where would you enter? Where's your exit going to be? And then you go ahead and put on the trade. So I'm going to put up here. It's called the position size calculator. If you haven't tested it, I believe it's still available on the homepage of TFNN.com over in the left-hand side here. So what you first do is it's got the instrument. We type in BMY, do a quick search. It comes back with Bristol Myers Squibb. Oh, boy, the data feed on this looks to be down. I hate when that happens, but we can go ahead and calculate it ourselves anyways. And that is what I was looking for was the average true range of the last 10 days. So we're going to come back here. We're going to do a quick estimate of that. So if we take a look at April 23rd, this ran from a low of 42 to 42.87, so we got about 87 cents there. Yesterday went from 41.39 to 41.28. That's about 90 cents. So we're going to use 90 cents inside this as our average true range here for this purpose. So we're going to go ahead. You're going to go short. So we got a stock. So what I'm going to select, we're going to go ahead and short. I'm going to use $10,000. So this says for every $10,000, we'll calculate approximately how many shares that you would take as a position size. We're going to use 90 cents as the average true range. We're going to multiply that times the Fibonacci number, 1.618, to be able to set our stop. We said we would enter right around the 39.80 area, I believe. The ultimate outcome on this would be, I believe, was right around 31.64. So let's just see if the ultimate outcome were to occur, what type of risk reward that would give you. About 5.6 to 1 risk reward. Let's take a look at what the conservative approach would give to you. That conservative approach says 36.71 would be the outcome as far as where this would move to, and that would give you about a 3 to 1. So even if it clears that low, you still have a 3 to 1 and about almost a 6 to 1 reward to risk. So that would seem logical to me to go ahead and take that trade. We've already seen the reversal signals on this. And if we see a continued move lower with volume, then that looks like a pretty decent trade to me. Now, that says that the stop on this here, the stop actually would probably have to be raised because we said we will want to stop above that evening star formation. And I see the hard stop here says 41.26, so the stop would have to be a bit higher than what we just calculated on the average true range. But approximately, as far as shares, you don't even need to risk 1% on this because, in my opinion, you don't want to put more than 10% of your total holdings in any one equity. And by this case here, by risking 1%, you'd have 27% of your total funds locked up in it. So really all you need to do is probably put about a third, only risk, so a small amount, maybe 0.33, and that would give you about a 10% risk. So you're looking at about 25 shares for every $10,000 in free trading capital that you would have. At least that's how I would look at it with Bristol Myers Squibb on that.
Okay.
Does that sound all right? Yeah? Okay. Now, let's go take a look at Hess. You wanted to look at Hess as well?
Yeah, I actually just got out of that. I learned the hard way. Once you double your money on options, you should take your profits and be happy. So I was in a short-term trade. I was in the April 26.70 calls. I picked those up for 70 cents, and I just got out at $1.45. So I feel happy about that.
Okay, that's good. Okay, I like that. Nice move there. You know, this was a nice. When did you pick those up? Did you pick those up on April 17th?
No, I just picked those up just yesterday. I looked at the top as being 71.74, but it needed to get into a $70.72 price range because there's a few gaps along the way.
Yeah. Now, if we take a look at Hess, HES is the ticker symbol, folks. I've got that chart up on my screen as well, and not a bad-looking stock chart. This thing broke out on January 28th, 14 million shares, had some additional follow-through and broke out again the very next day, so it's got two gaps up there with 24 million shares, comes back and tests the first gap, that first gap from January 28th. The high of that was 63.76, 14 million shares, came back and tested it on February 25th and on the 26th with much lighter volume, 3.9 million shares. So that window held. Then it goes ahead and it gaps up again on March the 2nd or March the 4th, does that on 10 million shares. So all the strength here is certainly to the upside. And what was nice about this equity, just like it, Cam, just like it tested that January 28th gap that had 14 million shares, tested that with lighter volume. If we take a look at the gap up on March the 4th with 10 million shares, that came back and tested with 3.2 million and 2.9 million, and then went ahead and took off. So even though it's got this little bit of a gap down here from April the 15th, really on lighter volume, much lighter volume than the 10 million shares it was going up into. So looks to me like this thing should run to its highs. It does have reversal signals on it as well, but I like the, I like just taking a look at it from the shorter term time frame, this action from January 25th to the present time. So you had a real nice trade out there for sure, and I don't know if this thing is running into any real resistance. So I don't see any real big volume days to the downside as this makes its way up into the highs out here from April the 3rd. So if this thing can break out over April the 3rd, that's where you've got a bearish engulfing candle. Maybe it sets up some type of continuation trade.
Okay, will do. I'll keep my eye on that. Oh, and two, I want to thank you for back in, I believe it was like November of or December of last year, you gave me a really good trade in Johnson & Johnson, and that worked out real well too.
Oh, that's great. That's great. Well, thanks so much for listening, and you have yourself a great Thursday.
Okay. Thank you very much.
My pleasure. All righty. Let's go take a look at metals. Metals on the move for sure here. We've got King Dollars also on the move, so something is going to give. We've got the gold right now trading up almost $32 out at $14.55. As you can see here, volume on the upside here is pretty dismal. Of course, that's going against the big volume to the downside from April 15th and the 16th out here. But does look like gold wants to try to get up to that 1487 level. What we do know is gold is truly working off a oversold condition out here. So 1487 looks like to be the next target inside gold. At 1487, it'll try to take on the high of April 15th at 1495 out there. If we take a look at silver, it too is having a nice morning here, although nowhere near as strong as the yellow metal out here. Silver trading at $23.88. That's up almost 5%, so it's up over $1 this morning. But it's struggling just to get to the 0.382 retracement of that downdraft area coming off of April 9. 2430 is that number. That's the 0.382 level. It's been up at 2403 today. Volume so far, 45,000 contracts. Of course, that's coming into 200,000 contracts plus to the downside. If we take a look at natural gas out here, natural gas moving up a bit today, but really having more of an inside day. If we take a look at yesterday, natural gas wants to get down to the bottom of this rising price channel, somewhere in the 3.90-ish range out there. That's on natural gas. Let's take a look at light sweet crude. It has a mind of its own, and that mind of its own is moving topside here. This had put in a Gartley buy pattern, close to a 0.786 Gartley buy pattern, and a butterfly buy pattern. That's the light blue area. Let's go take a look at where the likely outcome of the move here is. We're going to come off of the swing point high that was put in on April the 1st out at 97.80, down to the low at 85.61 on April the 8th. 93.14 is where this wants to trade to. It's at 91.70 right now. Very nice wide-ranging bar yesterday, taking just a little bit of a timeout so far this morning out here. That is on light sweet crude. Let's take a look at bonds. Bonds here not really doing much themselves, maybe just building up some energy here to take on and complete their A to B equals CD up. That'll take bonds into the 155.25 level. First, it's going to have to clear. You'd like to see it clear the April 5th swing point high. That is 148.09, trading just slightly below it right now. And you want to see it get past that with more than 530,000 contracts. If it does that, 155.25 is the target, with 158.16 being the ultimate target on the 30-year Treasury. Let's go take a look at what's going on over in Germany. You've got the DAX trading out at 78.29 right now. That has made its way back to the 0.68 retracement of its first A to B equals CD down. It made the 1-to-1 A to B equals CD down. It completed that almost to the penny back on April the 19th out there. It had a nice bullish engulfing candle session here on April the 23rd. Had some additional follow-through on yesterday. Looks like maybe the DAX wants to make its way up to the 0.786 level, which would be 79.34. Trading at 78.32 right now. Let's go check in on the FTSE over in the UK, see what this is doing. The FTSE making its way back into the most recent swing point high from April 2nd, but also looks like what it really wants to do is get up into, in fact, it's trying to get up into the March 15th area. That low is 64.70.10. It has not gotten up there yet. The high so far today, 64.67.11. If it does close inside 64.70, then it will go ahead and make a run for 65.33. This has a pretty nice butterfly sell pattern out here. The actual objective was pierced by about, looks like about 90 points out there. Maybe not full 90 points, maybe 80 points out there. I would say that pattern is still in play. Let's take a look at, we haven't looked at the Nikkei here in a while, so let's go see what the Nikkei is doing. Moving higher, continuing its moves higher. In fact, we need to put the Nikkei on a longer-term chart to get a better perspective. Let's try the weekly chart for the Nikkei. The Nikkei here now up and over the 0.618 Gartley sell pattern. That actually completed last week, completed 2 weeks ago. You can see it's now moving up above that level, 13,507. Let's actually take a look at the retracement levels off of the swing point high that I'm using here, which is on March the 2nd. That is 18,300 all the way down. I'll tell you March the 2nd. You're saying March the 2nd when? March the 2nd of 2007 out here. So I'm going back all the way to March of 2007 from that swing point high down to the low that was put in here back in October of 2008. The actual 0.618, oh, how about that, is 13,978.64. Let's redraw this pattern. So right now, what it is actually doing, it's hitting the 0.618 Gartley sell pattern, and it's doing it really to the T. How about that? I mean, we're talking to the T where it closed. 13,978.64 is the actual 0.618 retracement. It actually got up to today, today, 13,974. Good Lord, 13,974.26. So far, off by $4. So it'll be interesting to come back and take a look tomorrow at the Nikkei. It can travel higher. If it does blow past this 13,978 level, then the Nikkei will want to head up to 15,900. That's a heck of a move coming off of the low back here in, the move began in November 16th. You talk about a move. That went from a low of 86.19 up to 13,000 out there. That is an explosive move. That's on the Nikkei. As long as we're inside these charts here, let's take a look at the Hang Seng here. This is the weekly chart on the Hang Seng, having a nice hammer candle out here, a dragonfly doji candle, quite frankly, from the April 19th week. So maybe the Hang Seng does not want to move down and test the support level here for a while. That support level we're looking at is inside this rising price channel, but really looking at the bullish formation back from November the 16th out there. So the Hang Seng, if we take a look at where this thing could actually pop to again, this is the weekly chart that we're looking at. So we'll come off of the rising price channel swing point high February the 8th. 2013 down to that nice hammer candle that was put in last week. You can see it's made a dead cat bounce. If it can get up over 22,386, then 22,981 would be the next stop. Let's go in and take a look at some of the spiders out here, some of the sectors with inside the S&P 500. Let's take a peek here at the XLP, the consumer staples sector. That was down with big volume yesterday, huge volume off of the top 30 million shares to the downside. When else has this done 30 million shares? That's a good question. When else has this done 30 million shares? How about I don't show ever doing 30 million shares. So yesterday, the biggest volume day that this ETF has had, and it was volume off of the top, all-time highs out here. It's holding the Johnny Cash Basil Chapman 9-period EMA, and Basil, I faked him out yesterday. I said he'd be up next, but I do have one more segment to go. He will be up in about 16 minutes. That is on the XLP, so volume off of the top there. We know Procter & Gamble being one of the big components behind that move. Still not a good sign. Energy sector, the XLE, trading out right now at 77.80. ExxonMobil is out with earnings. We'll go take a look at that stock when we get right back. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 80 points right now, trading at 14,755. S&P up 11 at 1590. Let's go check in on ExxonMobil. They were out with earnings here before the bell. They did revenues out here. You got to love it. Total revenues, says total revenues and other income, $108 billion. Of course, that was versus $124 billion from a year ago. Right now, ExxonMobil trading out at 88.57. Gap down this morning, thus far creating an evening star formation candle. As we take a look at ExxonMobil, we see this little consolidation area that it has been trading in. I'm using the area. We could actually lift the consolidation level a bit, probably right up to about here would be pretty decent. So really traveling in a consolidation range from about the highs of about $90 all the way down to the lows of $85. And really these consolidation ranges being set up here also not just by the candles, but really by bullish and bearish candles. If you come back into the time period here of November 16th, it created a little morning star, 3-candle reversal formation as those lows were tested again. Nice bullish engulfing candle. No bullish sign right here, but your bulls hanging out on the left-hand side of the chart over here as price had moved down on April 17th down to that low of 85.02. Volume there was 17 million, and that was coming in and testing 19 million and testing 17 million. So not enough to really break it down. It looked like that ExxonMobil would go back up to the top of the range. The top of the range here would be, right as we said, in about the $90 level up here. You had a bearish engulfing candle right here. That high was 90.33, but it engulfed this little doji right back here, which the high was 90.92. Had a nice little doji candle yesterday, but this was really the reversal signal. It's the because the doji's not a reversal at all. And if we take a look at the signal here, you gap down this morning. That's one bearish pattern, and then the second is the 3-day pattern here, the evening star. So it looks like what ExxonMobil wants to do couldn't bust it up and couldn't move up, and will come all the way down to about the 85 level. Let's go out to Oklahoma City to Nick. Nick, thanks for calling. Thanks for holding. How are you this morning?
I'm just fine. Thank you for taking my call.
My pleasure. You want to take a look at CLF. Is that Cliffs Natural? What is CLF?
Exactly, yeah.
Okay.
They reported yesterday, and I got some while they were beaten down like dogs, and now I was wondering what would be the best time to sell them.
So you are long this, or no?
Yeah, I'm long, yes. Much
You're
lower
long.
price.
Oh, okay. So we got Cliffs Natural. It is up nicely this morning, gapping up, and it's got some pretty decent volume behind it. So far, 16 million shares in a little over an hour and a half of trading, and it's running into the downdraft here. What you want to see this thing really do post-haste is quickly is you want to see this get above $22.12. Had a big volume downdraft. You're right. It was beaten down with 51 million shares down at the lows from March the 27th. Now, the good news is that area was tested, and it was tested on some lighter volume. Little hammer candle, very small hammer candle on April 22nd. You'd like to see it clear the area where it broke down, which is the March 26th level. If it can do that, then where this ought to travel to, Nick, is the last area where it broke down, which was on February the 13th, right around 2902 to 3120 out there, and that's on Cliffs Natural Resources. Alrighty?
Fantastic. Thank you very much for good news.
My pleasure, and have a great Thursday. Folks, stay tuned. It is a terrific Thursday. That means we've got our man Basil Chapman up next. Following Basil, Larry Pesavento, then Daryl Martin from 1 to 2, David White 2 to 3, and the boss from 4 to 6, Tom O'Brien. Remember, folks, the way you do anything is the way you do everything, and become a pioneer of your future versus a prisoner of your past. Have a great day, folks. Look forward to seeing you in the morning.